Hello, this is Bogdan, and we're going to talk about how ESPP works. First, let's talk about what is ESPP. ESPP is a stock purchase program available to employees of a company that allows them to buy company stock at a discount price. What that means is that as an employee, you can commit to a fixed amount of your salary every month to be used to buy that company stock. So ESPP as a program has a start date and an end date. And the shares that are being bought in your name are at the end of the ESPP program, and usually they are bought at a discount price. The way to calculate this is that the company will take the stock price at the beginning of the ESPP program and at the end, and then you take the minimum between the two and apply that discount price. And here's an example. Let's say on January 1st, the stock price of your company was $5, and December 31st, it was $7. The minimum between the two is $5. On top of that, you apply a 15% discount, which means that the price that you're going to be purchasing the stock at is going to be $4.25. Okay, now let's take a deeper look at a more specific example. Let's say you have a company, your stock price is $10 at the beginning of the ESPP period, which is January, and then in December, let's say the stock price stays the same. It's also $10, and we can play with that in a second. As an employee, you're adding $100 every month in this program. So in total, you're adding $1,200, which means that with $1,200, you can buy exactly 141 stocks at that discount price. So that discount price is calculated by taking, again, the minimum between 10 and 10, which is $10, and you apply a 15% discount, and then you see how many shares you can buy with this amount of dollars, which leads you to a gross profit of $211. Okay, so basically, this is how much profit you make from being part of this program. Now let's see, what else could you do with this $100 every month? Well, you could have a bank deposit. And a bank deposit, let's say it gives you a 1% interest rate. And what that means, and you have all the formulas here, that at the end of 1 year, you keep applying $100 every month. At the end of 1 year, you're actually making $1,206, which means a gross profit of $6.5. It's really not much, and it's really, there's a huge difference between $200 here and $6 here. And if these numbers were higher, obviously the rate of the difference, the percentage of the difference would be the same. So then the next question is, what should the interest rate be in order to get this level of a profit, $200? And I built this case as well. And as you can see here, you need to be at about 29.7% year-over-year interest rate with your $100 deposit every month in order to get to the same level of gross profit. Okay, so what I'm really trying to say is that if you have a way to invest your money in something that gets you a profit rate of more than 29% a year, you should do that. But otherwise, ESPP is really a great program for you to invest your money, your cash, and make a pretty good profit at the end of the day. And again, this assumes that the stock price remains the same. Now, if the stock price were to drop, what you can see here is the profit is exactly the same, because the whole thing is that you're taking the minimum between the two and then applying the discount when you're buying the shares. You can see the number of shares going up in this particular case. And the assumption is that you're selling the next day. So you're buying at $5 with a 15% discount, and you're selling the same day at $5 as well. Now, if the stock price were to go up, let's say $12 a share, you can see here already that the profit went up more than twice, from just 20% increase in stock price. And this is just how the math works on this. So all this to say that ESPP as an employee stock purchase program works really well, and the 29.7% interest rate here is something that is basically unseen. and this is at a 15% per year discount price. Now that might vary from company to company. This is the average that I've seen in the industry. And thank you.